Okay, so today we're going to be looking at the uses of accounting information. All right, now, first of all, who are the users of accounting information? The users of accounting information are basically individuals or groups that find interest in the content of an entity's financial statements. And the financial statements of an entity include the balance sheet, the statement of financial position, the statement of cash flows, the statement of changes in equity, and then the notes. Now, the users of accounting information of an organization can be classified into internal users and external users. Now, the internal users of accounting information refers to individuals and or groups that are found within the business or the organization itself. And they include the owners of the business or the shareholders if it is a company. Why would owners require accounting information or need financial statements? One is that they would want to abreast themselves with the progress of the business. Through assessing or analyzing the financial statements or the accounting information of a business, the owners are able to see whether the business is progressing or retrogressing. Also, the owners of businesses or shareholders are able to assess the performance of the management that have been put in charge of the business. So by assessing the accounting information of the business, the shareholders are able to decipher whether the managers are actually doing their job. Also, owners or shareholders of businesses are able to appreciate their return on investment through assessing the financial statements or the accounting information of the business. They are able to see whether they are getting value for the money they have injected into the business. Another set of internal users of accounting information are the managers. Now, the managers for business need accounting information to evaluate the outcome of their own decisions. Now, the second reason why managers might require accounting information is to appreciate the performance of competitors. By analyzing their own performance, they are able to peg it against the financial information or the accounting information of other competitors to run a comparative analysis and see if they are performing or not. Another reason why managers might require accounting information is to inform their current and future strategies. So based on the information they get from the current financial statements, they are able to make adjustments to current strategies, which would feed into future strategies to help the business progress in specific areas. Another set of internal users are the employees of the organization. The staff of the organization require accounting information in order to be informed about their job securities. By assessing the accounting information of a business, the employees are able to ascertain whether the company is going to be a going concern, whether the company is liquid enough to continue providing their social security, continue providing them with their job incentives. Also, when employees assess the accounting information of a business, they are able to ascertain that, this business is going to last for so long based on their liquidity and based on their asset base. Another reason why employees might require accounting information is to help them make decisions about employee benefits. Before employees would approach management, they will be able to reason with management and say, hey, this is what we did and this is how far the company has gone, and so it would be in order if you could meet us with this particular form of incentives. All right, now let's go on and look at who external users of accounting information are. The external users of accounting information refers to the individuals or groups that are found outside the operations of the organization or the company, and they include lenders. Now, lenders of businesses require accounting information or make use of accounting information to ascertain the ability of the entity to make interest payments and capital repayments. Now, if a lender is loaning money to a business, they would like to know if the company has the capacity to make payments, those interest rates, and also the capital which is being lent. Now, another reason why lenders require financial statements or accounting information is to ascertain the possibility of loan default and the ensuing consequences. They would want to know their risk they are putting themselves in, and then assess whether they are ready to take on that risk. Another set of external users are the customers of the business. Now, the customers of a business require accounting information to be able to ascertain whether the business can be relied upon for continuous supply and business relations. So if we the customers assess the financials of a business, and we see that, oh yes, this business is a going concern, then we are comfortable to do business with the company in the long term. Other than that, the customers would seek other alternatives. We move on to the next set of external users, and these are the suppliers. Now, the suppliers of businesses also require accounting information to ascertain whether the entity has the capacity to pay for credit purchases, because not all supplies are done on cash basis. And if we are going to supply you on credit, then we should be able to know, one, you are liquid enough, and two, whether you're a going concern. The next thing is for us to be able to classify their customers into key categories. Now, based on their accounting information that is being provided by a business, suppliers are able to ascertain the quantum of resources that are being purchased from them. Okay, and they are able to, based on that information, establish a particular business as a key player with which they are going to have long business relationships with. Another set of external users is the government. Now, the government require accounting information of businesses enabled to have or gather information on production outputs and employment rates. For instance, they would like to know the rate at which unemployment or employment has been either progressing or retrogressing. The government calculates its GDP based on the information of production output that they solicit from businesses within their jurisdiction. Another reason why the government would require financial information or accounting information from businesses is to be able to provide information on taxes. The government gets its revenue from the taxes paid by businesses, and so by analyzing the financial statements or the accounting information of businesses, the government is able to estimate a level of income that would be generated through the various forms of taxes. Now, another reason why the government would require accounting information is to assess businesses for grants, subsidies, and reliefs. Now, before a business would gain any form of subsidy or grant from a government, the business would have to tender in their accounting information or financial statements for analysis for the government to see if, yes, you meet all the requirements and so qualify for a particular relief. Another set of external users would be investors. These are people or groups that would like to inject money into businesses for growth and also for returns. Now, they would require accounting information to be analyzed in order to know whether the company is in a good state to be invested in. No investor would want to place money where they would lose it. And so investors require accounting information to ascertain whether the business is going to be a going concern. Competitors are another set of external users. Now, competitors require accounting information or analyze accounting information to ascertain the strengths and weaknesses of their competitors. So, by analyzing, for instance, the balance sheet of a competitor, a business is able to see the asset base or the liquidity potential of the business. They are able to decipher how well their competitors are performing and where their competitors fall short. And so they, from time to time, analyze the financial information or the accounting information of their competitors. Another reason is also to serve as a benchmark for performance analysis. When competitors analyze the financial information or accounting information of other businesses, they mark out key areas where they themselves are falling short and then try to match up to those performance standards. Another set of external users are the regulators. So for banks, for instance, we would have like the central banks being the regulators. Now, the reason why these regulators require accounting information or financial statements is to ascertain whether these businesses within their jurisdiction are operating according to the rules and regulations. Then we have financial analysts. These may be individuals or groups that may require the accounting information of businesses to analyze them and ascertain their financial strengths and other factors. They might also analyze a couple of financial statements or accounting information of different businesses within a particular industry in order to come up with a report on how a particular industry is performing or not performing. Then we have the general public. Yes, the general public might also require the accounting information of a business or the financial statements of a business to ascertain whether the business is delivering value for money. And also, they might require the accounting information of a business to be able to ascertain whether that business is fulfilling its legal, ethical, and social responsibilities within the community or society in which it is conducting its operations.